seeing the world economy change its direction because of geopolitical shocks. So we can't ignore all of these other things. We have to consider these risks. And of course, those risks can multiply, and we understand that. But this is also the time when we're paying nearly historically record low hedging costs for appropriate investors.
We're getting investors, especially retail investors, I think right now are happy that they're getting actual returns on cash. Interest rates, of 5% and more on CDs is where people want to put that money. And I always hear about the cash on the sidelines. Have been hearing about it for 20 years. But Goldman Sachs is out today saying there's a wall of money pouring into the stock market in early July. They write the new quarter, the Q3, and the new half year, second half, is when a wall of money comes into the equity market quickly. Are you a believer that retail cash is enough to pump up markets even more?
Look, I believe in the fundamentals, and I think that last year we were quite depressed with everyone believing accelerating inflation and recession at the same time. We're not expecting to repeat the returns of the last 6 months. 16% for the S&P 500. We do think that there's a lot of catching up opportunities below the surface.
Okay.
And we don't believe that these short-term interest rates are going to endure.
I've got to cut you off there, Stephen, because we're about to see the rockets, the booster and the Starship splash into the Indian Ocean and the Gulf of Mexico. I want to bring Ed Ludlow in, Bloomberg Technology co-host. Ed, we're seeing a lot of cheering there, so I guess it was successful?
This was an outstanding success for SpaceX, and it represents progress in the Starship program. We kind of missed the magic moment, but what they did was a controlled re-entry of Starship into Earth's orbit. Old-fashioned kind of rocketry where a mix of old-fashioned rocketry and modern-day rocketry where you use air resistance to slow down the Starship craft as it passes through Earth's atmosphere, but also the Raptor engines on the base of Starship to kind of reorient it. For lots of that process, we didn't have a clear visual. There was a camera feed, but debris and ash was covering the lens. But because the Starship spacecraft is fitted with a Starlink receiver, SpaceX, even despite just like insane temperatures surrounding the spacecraft, were able to maintain the feed. But what gave SpaceX confidence that it was all going to plan is that even when the camera cut out, there is data feeds on the right-hand side of the screen which show the speed of descent slowing and the altitude reading. And the fact that they were able to constantly get that data was a sign that everything was valid. The goal of this test, for the fourth flight test, was to work towards reusability. So you're completely right. In this instance, the Starship spacecraft touched down in the Indian Ocean. It was basically a controlled splash or a controlled dunk. Earlier, about an hour ago, the Super Heavy booster, the actual kind of rocket part that sent the combined system into orbit, had a controlled splashdown in the Gulf of Mexico. I think I incorrectly said on air earlier it was in the Indian Ocean as well, but it wasn't. It was in the Gulf of Mexico. These are all about data gathering, right? And there'll be loads of our Bloomberg television audience around the world that are saying, well, what are you talking about? They dumped both parts of the Starship system into the ocean. They will try to receive and revive and salvage those parts. But really the value of these exercises is, one, gathering the data. What the Starship craft was able to do is reach orbit, travel around the world at orbital velocity, re-enter in a controlled fashion, and then touch down, albeit a splash, in a controlled fashion. The next goal for SpaceX is to increase the cadence of launch. This is an incredibly powerful launch system, and so we wait and see when they get their next license and go again. But for now, a big success for SpaceX and Starship Test Flight 4. This is Bloomberg.
I'm Katie Greifeld in New York. Welcome to Bloomberg Markets. You take a look at markets on this Thursday morning, and it's actually pretty quiet right now. You take a look at the S&P 500, pretty much unchanged. What's interesting is that the NASDAQ 100 is currently lower by about, 0.3% or so. Of course, big tech has been leading the way. We've paid a lot of attention to the likes of NVIDIA, for example, which has been powering both benchmarks higher, including the Philadelphia Semiconductor Index. But as you can see, that is your big underperformer today. The stock's currently off by about 1.6%, and that's as NVIDIA falls to the tune of about 3% or so. But that's after NVIDIA joined the $3 trillion club. And of course, in doing so, it becomes the first chip company ever to hit a $3 trillion market cap, now surpassing tech giant Apple. Never thought we'd see that day, or at least certainly looked less likely about 2 years ago. Bloomberg's Tom McKenzie has the details now for us. And I guess the natural question is, after $3 trillion, how big could NVIDIA get here?
Yeah, look, on one count, this is not surprising, given the grind up that we've seen in terms of the shares, in terms of this company, all the enthusiasm around it. 150% up year to date, tripled, of course, the value of the stock just last year, adding $1.8 trillion in market cap this year alone. But on another measure, it is remarkable, isn't it, given the size and scope? And as you say, the first time that you've had a $3 trillion market cap for a chip company ever on record. Just dipping below that, of course, in the session today. Can it get bigger? Well, the expectation certainly Jensen Huang would like to think that it can. Him and his team at Computex over in Taiwan earlier this week really outlined that product cycle, the annual product cycle, and again reminding us that the data center part of the NVIDIA business that makes up about 70% of revenues right now, they want to expand beyond that into laptops, into of course the B2B and commercial conscriptions, and then the software and services component as well. So the expectation, of course, from NVIDIA, the team, and many investors out there is they can continue to grow. Revenues this year expected to come in at around 120 billion US dollars. They've got margins of between 60 and 70%, but there is the competitive threat. Some would say that's further down the line, though.
Further down the line, that's exactly what I want to talk about, because, of course, we talk about NVIDIA's head start here, and that's propelled it to this $3 trillion market cap. But you have the likes of AMD, Intel, for example, who would love to make up that gap. How tough of a climb is it, though?
They are behind, of course, significantly behind. AMD coming out with their upgraded chips this week as well, talking very robustly, confidently about the prospects. But the reality is they're looking to notch up revenues within those AI accelerators of about $4 billion US dollars this year. Again, compared to 100 billion plus for NVIDIA. Intel, Pat Gelsinger was there as well, touting Intel's AI chips. Of course, they're building out their own foundries, taking ownership of one of ASML's ultra and extreme ultraviolet lithography machines. But the gap is there. And again, NVIDIA has that package. It has the software, the services, and the hardware, and it wants to embed itself not just in the data center part of this story, but the enterprise and the individual laptop story, as well as sovereign component as well. So the gap is huge. They know they have to play catch up. They're investing around it. And then there are the companies. The other risk potentially for NVIDIA further down the line is some of its key customers. You think of Meta, you think of Amazon developing their own AI chips. But again, that seems to be much further down the line. Demand for NVIDIA's chips still, of course, outstretching and outstripping supply until 2025 is the estimate.
Yeah, and you've, of course, not seeing exactly today, but you've certainly seen that in this stock's just incredible run up. Tom McKenzie, really appreciate your insight there. That, of course, is Bloomberg's Tom McKenzie. And let's welcome now Nancy Tengler. She is CEO and CIO of Laffer Tengler Investments. And I think we have to start with NVIDIA and what we're seeing just in terms of the domination. What we were just talking about with Tom, of course. You have a lot of sort of second and third place players, maybe even down the list there, who would like to catch up. But how much of a head start does NVIDIA really have here, and what does that mean for the rest of the market?
Oh, well, Katie, thanks so much for having me. They of course, are yards or miles ahead of their next competitors. And that's reflected, of course, in the run-up in the stock price. But I think there are other opportunities around the edges in hardware and software that you can benefit from as an investor. I'm interested to see what happens at WWDC for Apple. That's going to be pivotal. And then, just generally speaking, what the chip names around NVIDIA, so think Broadcom, Lam Research, and even AMD, though we know they're behind as well, what they're saying about demand.
Yeah, absolutely. And we think about, of course, the big confab that we had in Taiwan this week, where a lot of news was made from these chip companies. Also, a big topic of conversation was the notion of AI PCs. And if we think about what the next exciting narrative to latch onto might be, I mean, AI PCs, they could be up there.
Yeah, I do think that's going to be an upgrade cycle to end all upgrade cycles. It's going to benefit Microsoft. It's probably going to benefit HPQ, Dell, and I think you want to sit back and watch this one and try to participate as an investor because this is pivotal. And we've talked before about our analogy to the 1990s. There are some that are coming out saying, well, that's not relevant. There's a lot of differences. Of course, there are, but there's also a lot of similarities. And the one major one, we saw it today with unit labor costs lower than expected for the first quarter and revised down from the initial numbers, but productivity still at a really impactful level. The survey was 0, it came in at 0.2. So I do think we're in a productivity-driven growth environment, and it's going to be driven by things like AI PCs and the software applications.
The upgrade cycle to end all upgrade cycles. It's going to be interesting to watch that one. Let's talk about some of the other big names out there. Of course, that $3 trillion market cap for NVIDIA surpassing some of their rivals. But you highlight Microsoft, you highlight Amazon in your note as companies that are also quite large here, but seems like you're pretty favorable on.
Yeah, well, so what we saw from Goldman published a piece that said, and we all watched it, software just got pummeled in the last month or so, and it was the worst sell-off in technology for the previous 11 weeks, and 60% of the sell-off was in software. That's the hedge funds. They come and go very quickly. The good news is they'll be back. And Microsoft seems like an obvious recommendation, but if you want to be certain about who's going to survive the AI narrative, it will be Microsoft. And then, as you mentioned, they've got the AI PC upgrade that will also benefit at the margins. So I think that's a name you want to own. Under Andy Jassy, Amazon continues to generate growth. They cut costs. AWS grew at 17, 18% last quarter, and as did Azure grew at 31 and Google at 28. So the hyperscalers are a place where you probably want to park and just watch this one and sit it out.
Well, let's bring the fundamentals into a more technical sort of discussion, because there was also an interesting note from Goldman yesterday talking about this wall of money that Goldman sees fueling basically a stock market rally. They say that the new quarter, the third quarter, the new half of the year, the second half of the year, that's when a wall of money comes into the equity market quickly, which makes it sound like you're going to see a lot of buying come July. Does that theory hold water with you?
Think so, Katie. I mean, look, this is a bull market, and the naysayers can talk it down day to day, but the secular narrative, the growth narrative behind this bull market will continue for some time. And yes, we'll get exogenous shocks. We've got an election coming up. We've got earnings season, starting in a few more weeks, or restarting. Never ends, it seems. And so I think you want to pick your spots. But what I've learned over the long term is that let the hedge funds create the volatility and then step in the gap with your money on the sidelines. The other thing that this report I don't think mentioned was share buybacks. And that's going to continue to put a floor under a lot of these large names. I mean, we even saw yesterday with Lululemon, they announced, a new buyback. So I do think you want to own the high quality names. You want to stay in. As the great Peter Lynch said, don't let the market scare you out of stocks. You want to stay in and you want to stay invested because I've seen this game or this play before, and it continues for quite some time. We're in the first act.
We're in the first act, and to your point on earnings season, it never ends. I'm actually going to get that tattooed so I can just bring that up on air. But let's talk a little bit more about the election, which you mentioned as one of the potential risks out there. We were speaking, of course, with Jason Trennert of Strategas a few days ago, and he mentioned that, of course, when it comes into the election, that you're probably going to see some stimulus. Obviously, the party in charge wants to get elected again, and that theoretically could be a favorable setup. But when you think about all the different factors out there, earnings season, geopolitical risks, the Fed, for example, I mean, how high does the election rank when you're thinking about all the different sort of cross currents?
Well, historically, election years have been good for stocks for the reason you mentioned, that the incumbent wants to spend to stimulate enthusiasm. And there is still a lot of money. It's something like $4 trillion on the sidelines that has been appropriated but not spent. But it also takes a pretty big engine to deploy those monies. And we've seen it with, the charging stations. They spent something like I can't remember the number, $1 billion. And there's like 3 charging stations that have been built. So it isn't as easy as it sounds, but what you're starting to see from strategists is comments about a Trump administration, which we haven't seen even mentioned obviously for years, but in recent months. So I think the market's starting to price in. We'll see. I don't think either party is going to be good for spending, and I do think we have to do something about spending. This wall of debt is, in my view, bigger problem than the wall of money on the sidelines. We've got to get the debt under control, and if you look at it just in terms of total debt, and mind you, the CBO doesn't quote total debt; they quote net debt. Total debt is 34, 35, maybe it's 36 trillion now. It's rapidly increasing versus GDP number of about 26. So you have to step back and take a breath and say, this is not sustainable. The Treasury's funding at the short end of the curve. Interest costs are going up, something like last 2 years, they've doubled from 400 billion to 800 billion. So we need to deal with that. And I think that's going to be something the market's going to be watching.
Wall of money, wall of debt. Maybe we're going to talk about the maturity wall next time. Nancy, it's always great to speak with you. Great to get some time with you this morning. Our thanks to Nancy Tengler of Laffer Tengler Investments. Now let's take a look at what's moving underneath these markets. We're going to do that with Bloomberg's Emily Grafeo sitting to my left. And Nancy brought up Lululemon, and they're having a great day.
Yeah, that's right. The biggest intraday jump since October for the retailer. They boosted their earnings per share guidance for the year, and they also reported first quarter net revenue of $2.2 billion. That beat expectations and marks a 10% year-over-year jump for the retailer. And like Nancy had mentioned, they approved a $1 billion increase to their stock repurchase program. Overall, analysts are saying that the results for Lululemon were better than feared. CEO Calvin McDonald had some interesting macro messages that perhaps we can learn from this report. He said consumers are still spending, but they're being selective of where they spend and what they choose to buy. Maybe also a fashion note in here. He said loose-fitting pants and biker shorts were hot products this quarter.
Interesting. Those are sort of polar opposites.
Exactly.
So.
The biker shorts are tight, loose-fitting pants. They also said that they're trying to target to more male customers.
Yeah.
Maybe making some more products that are for golf.
We were talking about that with Bailey a couple weeks ago. The men's section of Lululemon's pretty underappreciated if I, editorialize a little bit. But in any case, some needed good news for Lululemon. Let's talk about Robinhood with a crypto deal.
Yeah, this is an expansion of crypto businesses for Robinhood. They agreed to buy European crypto exchange Bitstamp, which specializes in institutional trading. This is going to be a deal that's valued at about $200 million, expected to close in the first half of 2025. And shareholders are liking that move. We're seeing that stock pairing gains a little bit after the bell, but still up about 2% after the open. And this comes a month after the U.S. SEC had warned Robinhood that it faces an enforcement action over its own crypto business. So we'll have to keep an eye on that regulatory approval. Of course, the deal hasn't yet been approved, but it's pending.
Yeah. Interesting to see Robinhood sort of doubling down on crypto here, definitely helping out the shares. Let's talk about Five Below, because Squishmallows, they're not cool anymore.
Do you know what a Squishmallow is?
I do. I own one.
Oh, you do? Oh,
yeah.
My gosh. I had to look up what it was, but I recognize the term because I see on TikTok a lot of people collect these Squishmallows.
I don't do that. Let me just say that.
People falling in a pile of Squishmallows. But Five Below, the discount retailer, apparently thought that people were going to be buying a ton of these, and they oversupplied, and the headline caught my eye. Five Below falls as shoppers prioritize food over Squishmallows. Apparently,
that makes sense.
They oversupplied these, and that contributed to an unexpected drop in same-store sales in the first quarter. And the CEO now saying, kind of just like Lululemon, consumers are being more discerning with their dollars, shifting from discretionary. People on TikTok have collected like 700 Squishmallows.
Yeah.
People are doing Squishmallow hauls. So now they're shifting now to food and beverages, and that stock, biggest intraday decline since March 2020, Truist Securities said. It's a painful earnings report.
Yeah, and to be clear, I only own one, and it's for my cat because they like to make mittens on squishy things. In any case, a big wipeout in Five Below shares. Emily Grafeo, thank you so much. Now coming up, the family tracking app Life 360 set to debut on the NASDAQ today. We'll speak to Chris Holes. He is the company's co-founder and CEO next. This is Bloomberg. Social networking company Life 360 is hitting the U.S. public market today, listing under the ticker LIF on the NASDAQ. The app allows families to share their locations with each other. Joining us now from the exchange, I'm pleased to say we have Chris Holes. He is the Life 360 co-founder and CEO. So let's get right into the weeds, because this is a dual listing. You're actually listed in Australia, but you're based here. Can you just explain why you listed in Australia first?
Sure. So we are a global company. We were very excited about the opportunity the ASX gave us when we were smaller. It gave us the benefits of being public at an earlier stage in our life. But we are a U.S. company. We're getting very large. We're now the 14th biggest app in the entire country by DAU. And this is the right long-term home for us and a great source of capital to access as we continue to expand, because we have very big ambitions.
I'm just really interested in this, I have to say. I mean, we were talking yesterday about how you see London-based companies coming to the U.S. You're, of course, a different story, but when it comes to the global exchange network. So by listing first in Australia, did that allow you to raise more money in your eventual U.S. IPO? How does that work?
It wasn't directly related to how much money we raised here, but we're a global business. We have users all over the globe. But what we have been able to do by being in Australia is demonstrate that we can run as a very reliable, predictable public company. We've grown our AMR 4 times in the years we've been public. We've shown that we can put up good guidance, hit our numbers, and it prepared us very well for the NASDAQ.
And let's talk a little bit about why now when it comes to the U.S., because as I'm sure you know, when it comes to the U.S. IPO market, it's been pretty muted. It's been pretty depressed. And I'm curious, why now for you?
Sure. So we're really getting the recognition I think we deserve as a company. We were never one of the companies spending huge amounts of money to grow. We've been consistently able to grow through word of mouth. We now generate cash. So I think in this market environment where people are looking for growth and profitability, we're a good company that shows that you can do do that very predictably with a great upside story because we're growing so quickly through word of mouth. We're saving lives every day. We generated over $300 million of revenue last year and are showing that you can have profitable growth.
And when it comes to, of course, your U.S. IPO raising just over $155 million, what do you plan to do with that fresh capital?
This is largely going to sit on the balance sheet, but we have a lot of levers we can pull to accelerate growth, from launching new verticals, more marketing, expanding to new regions, eventually M&A. We want to have that ready for when the market is open to that type of move. We're already generating cash right now, so the balance sheet is growing, but we really like having a strong war chest. And this is going to get great liquidity and float going, which is important to us because we already do have the dual list. We wanted to make sure that we got enough investors onto the register that we can get off to a good start.
And let's talk a little bit about where you see that growth, because you think about Life 360 right now, and it's pretty much known for basically parents keeping tabs on their children. How do you grow from there? Is it about really growing that audience, or do you see other potential uses here?
We are already much broader than that. One thing that's surprising for people to hear is only in the 30-something% of our customers actually have teens at home. Our free users span the entire range, from couples without kids to people taking care of their aging parents. And where our premium product is strong is when you give your kids those keys, but our users love us beyond that. And a lot of what we're really excited about is building different products for different life stages. So we bought Tile and Geobit, hardware companies, last year. In the same way that we were very early to location sharing on people, we believe that devices, so pets, things, laptops, cars, keys, that they're going to be part of our ecosystem too. And so that type of use case is much broader than families with teens, and we're all part of families, even if we don't have kids ourselves.
So different products for different life stages, just in about 30 seconds. I mean, you mentioned subscription, for example. What do you get with a subscription versus maybe the free version?
Sure. So I'll talk about our Platinum tier, which is just this amazing value. So you get more value from Life 360, more location history, more places, no ads, live customer support. But then we go on top of that, we get crash detection with emergency dispatch. So we literally know if you're in an accident without any sensors on your phone, roadside assistance, disaster, emergency, and travel response, a live SOS feature, stolen phone protection. It's a whole long list of things that are a lot broader than people realize. So it's everything you might worry about for your family, all bundled in one place at a very low cost.
Well, Chris, I know it's a busy day for you. Really appreciate your time this morning. Our thanks to Chris Holes of Life 360. Now, still ahead, we're going to take a look at the companies making the most social buzz today in our Social Climber segment. Up next, this is Bloomberg. right, it's time now for Social Climbers. A look at the stocks making waves on social media this morning. And first up, TJ Maxx and Marshall employees are reportedly being given body cameras in efforts to curb theft. The cameras will be worn by loss prevention officers, and footage will only be shared with police upon request. That's according to the parent company TJX. Of course, the National Retail Federation estimates that retail theft accounts for over $112 billion in industry losses. Next up, Chips Ahoy is debuting a new cookie recipe that fans are calling half-baked. It's the biggest update to the snack in over a decade, but some bitter cookie critics complain that the taste is, quote, nasty, overcooked, and truly terrible. Mondelez, it's the company behind the Chips Ahoy brand, said that it considered 60 different recipes before settling on this one. It's just how the cookie crumbles. And finally, we do have SeatGeek said to be adding banks to its lineup for its planned IPO that could happen later this year. The ticket seller is working with Citi and Wells Fargo on the planned listing, which is being led by Morgan Stanley. Representatives for SeatGeek, Citigroup, and Wells Fargo declined to comment. And of course, you can follow all the latest company buzz on TRE and Go on your Bloomberg terminal. Meanwhile, you take a look at these markets right now. The S&P 500 pretty much unchanged, very slightly higher if you're optimistic. You take a look at the sector level, and leading losses, you have big tech, as you can see with the NASDAQ 100 currently unchanged as well. You've seen the stocks pair some of its loss there. That's, of course, the Philadelphia Semiconductor Index, but still off by more than 1% on this Thursday morning. Now, coming up, dogs can now embark on sky-high adventures. We'll talk to Matt Meeker. He is the CEO of Bark Air, the first airline that caters to canines, next. This is Bloomberg. Bark Air is ready for takeoff. The world's first dogs-only airline offers charter flights from New York to LA and London. The price tag to pamper your pooch with a first-class flying experience starts at $6,000. And here with more, I am thrilled to say we have Matt Meeker. He is the Bark CEO and co-founder. And Matt, I'm going to start with a question that I think a lot of people asked when they read some of those headlines, and that is, why should this exist?
It should exist because the dog is part of the family, and we want to travel with our whole family and travel with them in comfort and dignity. And so we've heard from all over the world that people have been looking for a solution like this. We know we felt it ourselves, but it's really great to hear it from others that they appreciate that it exists now.
And let's get into the details of the flight, because we're not talking about commercial jets here, right? These are private jets with, I think they go up to 14 seats.
Right. It's a Gulfstream 5, seats up to 14. We're only seating 10, so the dogs have a little bit more room. And we would love to get to, our dream is what you're showing in the video there, that larger 747 and room for up to 77 passengers with the dog park on board.
Yeah,
but
so
we got to make our way there.
Yeah, it looks like you got to get some jumps in there as well. So we have to talk about the prices a little bit, because as I said, it starts at $6,000. If you want to go to London with your dog, it costs about $8,000. I was actually talking this through with Matt Miller. He's another anchor here. He found a flight to the Maldives that costs about $4,000. So this is quite expensive, and we're in a very high inflationary environment. People definitely cutting back. I mean, who is this for, theoretically?
Well, hopefully in time, it's for everyone who wants to travel with their dog. Certainly, it's starting at the most expensive that I hope, or we hope, that it will ever be. But we have to start somewhere, and at these prices, we're running pretty close to break even on it. Really trying to test the demand, see if there's demand for more routes. And if we have that demand, then we add more, hopefully more planes. We take a longer look at it. Instead of leasing one off, we lease for a longer period of time. And that allows us to bring our costs down. So not too unlike the commercial airlines, which, you know, the economy ticket was $600 in 1980, in 1980 dollars, so about $2,300 in today dollars. And today it's about $400. So we need the time to grow into it, but this is where we have to start.
Well, how much visibility on demand do you have right now? Because my understanding is you offer once-a-week flights from New York to LA. I believe it's twice a month if you're trying to fly to London. How booked out are you?
Very, very booked out, which is really gratifying. And we've got several sold out flights throughout the summer, even though we didn't give everyone a lot of time to book. So that's great. In terms of demand or requests, let's say, in the first week, we had 15,000 requests for new destinations and routes. And we're trying to accommodate those. We've recently added Paris as a route starting in the fall. But many more to come based on those requests and the demand we've seen so far.
Have those requests tended to be more international or for more within the country?
Everywhere. Certainly within the country. I can give you a little spoiler that the dogs and people of Chicago are feeling very underserved. So we need to serve them, but really everywhere. South America, Asia, throughout Europe, everywhere. It's really good to see.
Well, it's interesting to hear your comments about demand, and also that you're close to break even, because I was reading through some of the transcript from your earnings call, and you talked about the halo effect that Bark Air has had and has the potential to have on your products. And I have to say, reading that, I was wondering, is this more of a really elaborate marketing campaign than it is a money-making venture?
No. The hope is that it's a money-making venture. The hope is that it's sustainable and it's a service we can provide for everyone who wants to travel with their dog in this way forever and ever. We don't know if we have a business yet. Right now we know we have a lot of demand, and like I said, we're breaking even on many or most of our flights that we have scheduled already. but there's a long way to go. If we get a benefit of the marketing halo and the world paying attention, we'll take that. But it's a genuine effort to build a business here.
Let's talk about some legal concerns, because it's interesting. You take a look at Westchester County has sued Bark, alleging that it violates the airport use restrictions in Westchester, saying that those basically prohibit commercial and chartered aircraft with more than 9 seats from using the private jet terminal. I mean, how do you plan to navigate complaints such as that one?
Well, my understanding is we're not alone there, that there are some other air services in Westchester that fall into that same category and have ongoing litigation or a dispute with Westchester County. So we're kind of falling right in with that. Certainly we'll adhere to whatever rulings the FAA or the courts make there. But right now our sense is that won't disrupt our operations in any way.
I have another challenging question to ask you, and that is that this airline is just for dogs, and you're talking to a cat lady right now. I mean, I've actually traveled all over the country with my cat, and I mean, my natural question to you is, when is there going to be Meow Air? Why is it just dogs?
We're dog people, so we speak to the dogs, and we know the experience that we can make for them, but we have made a couple exceptions for cats. So our standing rule now is that cats are welcome so long as there's a dog in the family who will vouch for them and fly with them. But the interesting thing is we've been approached by every animal you can imagine. We've had requests for pigs, for roosters, for parrots, for snakes, for everything. So the cats have made the cut now as long as the dog is flying with them.
Snakes on a Plane. I think there's a movie about that one. But let's broaden out here and talk about the business overall, because Bark Air, of course, it's part of Bark. You're known for the Bark Box and things of that nature. And it's interesting. You reported earnings recently, and the revenue forecast for fiscal 2025, I think it disappointed a lot on Wall Street. And I thought that was interesting, because this is a time when plenty of pet owners are happy to spend up when it comes to their animals. So how do you turn it around? How do you capture some of that?
Well, we have turned it around. In the last two and a half years, I returned as the CEO, and we were hemorrhaging cash. And so the first thing was to stop that, or that's the end of the company right there. And we reversed that. So this past quarter was our second profitable quarter of our fiscal year. We're forecasting our first profitable year in the year ahead of us here. And I had said when I returned to the role that in order to grow the company and fulfill our mission and our dreams, we needed to slow down in order to speed up. We slowed down. We put the business on a more solid foundation. And from here, we've now brought in that talent to really drive the top line. We've turned our entire management team in the last 100 days. So we just need to give them a little bit of time to get up and running, but the horsepower is really significant, and I'm confident that we'll return to growth very quickly here.
Well, Matt, I can't tell you how much I enjoyed this conversation. Hope to speak with you again soon. Our thanks, of course, to Matt Meeker of Bark. And let's get a check on these markets. We're going to do that with Bloomberg's Jess Menton.
Well, Katie, taking a look at the broader market here, the S&P 500 still trading higher, so it actually had briefly turned lower after the opening bell here. But of course, as you know, it did trade and close at record highs yesterday, as well as the NASDAQ 100. So continuing to march higher. Really what happened in early trading, though, it was NVIDIA had been trading higher in pre-market, gave back a little bit of those gains. So if you look at the Philadelphia Semiconductor Index, it was down about 1%. So you had AMD, Intel, and other stocks like that, like Micron Technology, moving lower, but still nonetheless that index is higher. Moving over and looking at what's happening with the euro, not surprisingly, that is trading higher after the ECB's interest rate decision today. So that was widely expected when you are looking at those interest rate cut bets. And even though Christine Lagarde was tight-lipped about the future of what other rate cut expectations could potentially be, if you look at the curve, though, there are those expectations that there would be at least 2 more interest rate cuts. But again, a divergence when you think about the path of the Federal Reserve, and then also on the back of, we just had the Bank of Canada cut interest rates as well earlier this week too. And then you think about the Bank of England, obviously in a different situation because of them grappling as well with the inflation problem. But a lot of that recent data out of the Bank of England is showing that mild recession, things are starting to improve moving out of that. But looking over and seeing at some individual stocks this morning, some things I'm keeping a close eye on. Of course, NVIDIA, have to bring it up because that 10-for-1 stock split that's going to come into effect before trading on Monday. In order to be qualified to be for that stock split, you have to be a shareholder today. So that's something important. So you have seen this trend where ahead of a stock split, you do see a stock run up and then give back a little bit of those gains. But looking at the retail space, if you think about luxury retailers when it comes to athleisure wear, Lululemon, that stock's higher this morning because it boosted its annual profit outlook. But when you look on the opposite side of that, Five Below is actually trading lower here, down about 11% here. So it's on pace for its worst percentage loss actually since the start of the pandemic. But a lot of that was because it's cut its sales outlook for the year. And a lot of that was just inventory that it stacked up because of these sort of plush toys. I don't know, Katie, if you follow it, but these squashmallows that basically they were selling, not as many people were buying those. So that was why they were hurt. And then I had to point out what's happening with Kava. So this stock actually went public just about a year ago. It's up about 300% in that span. But the reason it's down today about 6% is because its largest stakeholders, Artal, actually is planning to sell about 3 million shares according to a regulatory filing, Katie.
Unfortunately, I'm quite well acquainted with Squishmallows. Bloomberg's Jess Menton, thank you so much. Now, coming up, we'll discuss how an election year impacts the future of climate initiatives. We're going to do that with Bill Daley. He is former White House Chief of Staff and former Commerce Secretary. He joins us next. This is Bloomberg. Well, it's time now for our daily Wall Street Week conversation. And today we're talking to Bill Daley. He is the former White House Chief of Staff and former Commerce Secretary. And he has a new role these days as Senior Advisor to sustainable finance company Crux. Wall Street Week's David Weston, of course, also joins us now. And David, a really interesting next act and an already fascinating career.
Yeah, cutting edge, actually, I must say, for Bill Daley. So, Bill, first of all, congratulations on your new gig. It's quite different for you. You were at J.P. Morgan, you were at Wells Fargo. As Katie said, you've been in the government in various capacities. Tell us about this relatively new startup, Crux, and what it's doing.
It is new. It's in the clean energy finance space. The first product they created is a platform to trade, as you may know, under the Inflation Reduction Act. You can now transfer credits, energy credits, so that the developers of a project who have credits can now transfer them, sell them to buyers who need that for their tax purposes. It's the first platform that not only addresses the buyers and sellers, but also the intermediaries like the banks, advisors, accountants. So it's a platform that right now has over $10 billion of credits that are available for purchase and for sale. So it's an exciting opportunity for me to join a company that, even though it's early in its startup phase, we've been very successful. Raised $27 million from smart investors like Andreessen Horowitz, some of the largest clean energy companies. They put together a team of 27 really great people who are young and are active, innovative, and we're out there providing a service for an important part of the economy and the growing economy in our country. There's over $300 billion worth of projects that have been announced in the clean energy space. And that's a great boom for many states, small towns, big cities where these projects are happening as we try to address the energy needs in all sorts of ways with new products, new innovation. That's the only way we're going to address our energy needs in the 21st century, is to have more innovative opportunities for energy space than the traditional ones.
Right.
Well, like you say, it's an interesting time, and it's interesting to see your own trajectory, of course, from the White House to Wall Street and now a startup to really try to take advantage of some of that and make it better. And I am curious, when it comes to this transfer market for IRA tax credits, that platform, of course, that Crux has pioneered, how developed is that market actually? How much is left?
Oh, it's continuing to grow. The opportunities are enormous. As more and more projects are being developed, put online, taking advantage of the opportunities. You know, there's much discussion around the subsidies, the energy credits. Obviously, energy credits have been in our system for a very long time. But the change that happened was the ability to transfer those energy credits. That gives a company, and I'll give you an example, like SBC Power down in Greenville, South Carolina. They had a project, they sold twice in 23 and 24 some of their credits. That gave them more cash to invest in their growth in Greenville, creating more jobs. So it's really a win-win for all the parties that are involved in trying to take advantage of these opportunities and grow economies throughout the country. So it's fun.
So, Bill, as you say, the statute, Inflation Reduction Act, specifically provides for this transfer. It anticipated this marketplace. How durable are these credits? Because you probably haven't noticed, we have an election coming up in November, and two very different approaches to the climate and to the Inflation Reduction Act. If, in fact, Donald Trump were reelected president, do these survive that?
Well, look at I'm not going to, as you said, not speculate about what may happen in an election for sure. But these are creating opportunities for economic growth throughout the country. There's not a red or blue state that doesn't have an opportunity going on by virtue of the subsidies, the support that the IRA gave. And let me just point out, for every dollar the government spends on these projects, the private sector is investing $5. So it's not as though this is just some big giveaway by any stretch. It is growing our economy. It is creating opportunities for new energy, possibly, that our needs will be serviced by. And it's innovative, creative in the 21st century. So I think as the legislators in whatever the next Congress is looks at the real success that's going on out there in the economy throughout the country, the question will be, do we want to kill these opportunities and this innovation, or do we want to support it? And my guess is, as a former Commerce Secretary, it's a pretty easy analysis, especially when you look at how much the private sector is investing in these projects.
Well, that's where I'd like to go. When it comes to the private sector, I hear your points, but when it comes to the future of investment coming from the private sector, I mean, how much is at stake in an election year? How much could that change if we do get a new administration?
Well, yeah, the new administration obviously is going to have to look at what are they going to do to grow the economy. We can all talk about things that maybe stymie it, but it's all about growth. The key to our economy, and this is just logic obviously, has to grow. What are you going to do to make the economy grow? Right now, as I mentioned, there are $300 billion worth of projects that have been announced that are going to be built and going to move forward on. Those are jobs, those are opportunities. That's new, innovative, creative ways to address our energy needs, which are going to only grow if the economy grows. And we can't just address them by the traditional sources of energy. There have to be new ones. And when you look around the world, you look at China, what they've done in the EV space and battery space. We've got to replicate that here in our country and grow our economy with new innovations and new ways to address the energy needs of the country if we continue to grow.
Bill, finally, do you have any sense at this point in this new market, what percentage of the tax credits made available actually get traded? Because presumably some companies keep them and use them themselves. They benefit themselves. Yeah. Others decide they want to trade. Do you have any sense of how many of the total credits get traded?
I don't have a percent, but as this market grows, the need, and what it does is it gives those developers extra resources when they do sell their credits that they could then put into the projects, as the example, as I mentioned, down in Greenville, South Carolina. It continues to churn and grow the opportunities for developers and for companies.
Well, Bill, really appreciate your time. Great to speak with you. Our thanks, of course,
Thank
to
you
Bill
very
Daley.
much.
Thank you. He is the former White House Chief of Staff and former Commerce Secretary. And David, who else do we have coming up?
Well, tomorrow we're going to stay in the Midwest. And we're going to go to Detroit, actually. We're going to hear from Jim Farley. They're opening the Michigan Central Station today. Big announcement in Detroit. It's pretty dramatic. So we're going to hear from Jim Farley about the rise and fall and rise of the auto industry in Detroit. That's tomorrow on Wall Street Week.
Have to say, so looking forward to that conversation. Obviously, a lot to discuss there. Our thanks, of course, to David Weston. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
We are seeing the labor market come into better balance.
That foundation for the economy is solid.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
This is not a labor market that's slowing down or grinding to a halt.
That's why everyone is looking at wages.
Payrolls report, 8:30 Eastern Time.
The May Jobs Report, Friday on Bloomberg.
All right, let's take a quick look at some stocks hitting highs and lows this morning, and we start with NVIDIA. It did hit a 52-week high earlier today, in fact, becoming the third stock to ever reach $3 trillion in value. You can see giving back some of those gains, currently down about 1%. It was down more earlier, so clawing back here. Let's also talk about ASML getting a boost as Bank of America raises its price target on the chip equipment maker to a street high, and you can see that's good for about a 1.5% rally in the shares. Now, on the other side, Five Below, that is, hitting a 52-week low after the discount retailer cut its sales guidance for the year, hurt by an oversupply of Squishmallows, as we have discussed extensively on this program. You can see shares really just a wipeout, currently down almost 12%. It's even worse if you take a look at Sprinkler, also down after the social media management company cut its forecast for the year. The news prompting a number of Wall Street downgrades. Shares currently off by almost 17%. Coming up, we do have Bloomberg Technology with Caroline Hyde and Ed Ludlow, but that does it for Bloomberg Markets. I'm Katie Greifeld, and this is Bloomberg.
Everything. From the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, NVIDIA continues its meteoric rise. It touches $3 trillion in market cap. Full coverage ahead.
Plus, SpaceX's Starship reaches new milestones in its 4th major test flight. We bring you the details.
And we'll discuss the latest in the world of crypto as Bitcoin still hovers near record highs. First, let's check in on the broader markets. Maybe just a little bit of profit taking today. Maybe we see the ECB over in Europe actually cut rates, but signal that maybe inflationary pressures are here to stay. We've got jobless claims actually showing that they're higher than anticipated, but all eyes on non-farm payrolls tomorrow. So at the moment, we're just cautious ahead of those numbers. We're trading flat on the NASDAQ. Interestingly, NVIDIA just off of that $3 trillion market cap just at this very moment, but it did eclipse it yesterday, Ed. We'll go into that in a moment. 10-year yield currently just pushing up 2 basis points. Bonds selling off globally after the ECB does cut, but still warns us that they've got to have a restrictive policy for longer to try and curtail inflation. That means the euro is actually just that little bit higher versus the US dollar at the moment. We're up 0.1%, as maybe we don't anticipate rate cuts coming for the ECB until at least pushing out now to maybe September. Move on, have a look at what's happening in the world of crypto. We're going to focus in on Bitcoin a little bit later in the show. We've had a little bit of volatility, but we're up 0.3%, 71,000, still at that very high level, near record highs. Will we get to 100,000 by the end of the year? That's what one key investor has been saying. But Ed, what are you watching?
Let's talk about NVIDIA. Gen Sanity, the phrase coined for the enthusiasm, let's say, of markets about NVIDIA's CEO. Look, this is a clear pullback. The stock's down a percentage point. As you said, we touched $3 trillion in market cap. We're going to get into it with Bloomberg's Jess Menton about valuations, comparisons against other peers on the S&P 500. Weightings are really important, but Apple's flat. I put that up as a precursor to my next chart with Meta, the best performer on the NASDAQ 100 from a points perspective, because this is all we care about right now. Let's bring up the terminal chart and look at NVIDIA's market cap relative to Apple. It is so close right now. Apple just a touch above 3 trillion. NVIDIA just a touch below 3 trillion. It was brief, it was short-lived. But the point is that NVIDIA is only the 3rd company to reach $3 trillion of market cap, and it's the first ever semiconductor name or chip maker to do so. Let's get into it, Carrie. Let's talk about on which metric we decide if this is fair, if it's a good idea, or if it's not.
And longer term, whether you keep on buying into this stock. Jess Menton's with us, of course, of Bloomberg. And we just had that perfect setup from Ed telling us, once again, Apple is back just pipping the post as number 2. But NVIDIA has just hit that landmark. It's all psychological, isn't it?
It really is.
And in many ways, so too is a stock split. It's psychological. What's driving us here?
Well, not surprisingly, because it is the stock split driving this, moving higher. Ahead of that, because Monday is when the official stock split goes into effect. But something that's important, to be an official shareholder before the 10-for-1 stock split, you actually have to be a shareholder today by the close of trading in order for that to work. So it's an interesting dynamic that we saw this huge run up and now the stock's selling off a little bit. Not surprisingly, we just did, to your point, Caroline, see that 3 trillion mark yesterday as well. If you look at the Philadelphia Semiconductor Index, obviously it houses other stocks like AMD, Intel, Micron Technology, also down about 1% today. But again, to Ed's point, when you're thinking about valuations versus the stock move that we've seen here, and also talking about Apple, Caroline, if you think about that April 19th low that we saw in Apple stock, that stock's close to about 20% higher in that span. It's only about 2% off of that December high record. But when you do look at NVIDIA in that span, that stock's up from that April 19th low for Apple, though, in comparison, NVIDIA's up more than 60%. So which one was the better stock to buy? But again, Apple does have that fundamentals behind it when you think about the buybacks for a company like this, Ed.
It's like one of those things. So it's 3 minutes past 8 in San Francisco, 3 minutes past 11 in New York. Is NVIDIA bigger than Apple? Okay, and that's what we're going to do every day from this point because we're so excited about it. But the actual reason that I showed this sort of in the moment session trading is an important one, which is that start of the year, NVIDIA had, I think, about a 3% weighting on the S&P 500. It's doubled to about a 6 or more than 6% weighting. And we talked at earnings about how NVIDIA's earnings like a macro level event. My point, Jess, is like it impacts a lot of people right now what happens with NVIDIA.
It does, especially when you're talking about this stock now being the second largest weighting in the S&P 500. And something that's interesting about this, even though we did see it eclipse Apple's market cap yesterday, earlier in this week, if you use the MEMB function for the S&P 500 in the terminal, you would have seen NVIDIA's weighting higher than Apple's, but still its market cap wasn't crossing the threshold of Apple. And the reason is because actually it has to do with float adjusted type shares. So Apple's float adjusted, it's actually 94%. Whereas the other 6%, for instance, is held by institutional big investors like, say, Warren Buffett, whereas NVIDIA or even Microsoft, those are 100% not adjusted. So there's a little bit of a divergence there sometimes when you're looking in the terminal. And if you saw a divergence at the beginning of this week versus what the weighting was, and we're kind of scratching your head wondering why NVIDIA's market cap wasn't bigger than that. But that's something else, that a dynamic when you're thinking about sort of the size and scope for a lot of these companies and why you're seeing discrepancies there sometimes in the data.
And we await that 10-for-1 stock split, which will be an interesting moment. Bloomberg's just mentioned. Thank you very much. Let's go up into space. SpaceX's massive Starship rocket blasted off on its fourth major test flight as the company makes or works to make the vehicle operational, reusable, and ready for regular space trips. I want to bring in Bloomberg intelligence analyst and fellow space nerd, Matt Bloxham, for this. I mean, loads of our audience were asking me all morning, because we carried the launch live, hold on, the booster got dumped in the Gulf of Mexico, Starship spacecraft got dumped, a controlled splash in the Indian Ocean. But really, I think the story here, Matt, is the data that's gathered from the process, and that's what was important for SpaceX.
Yeah, that's right. And actually, one of those words you said there, controlled, is really important too. That these were controlled re-entries and kind of splash landings for both parts of the asset. And I think that's really important. I think what we've seen in the previous launches is very big fiery explosions, which has meant they've not quite delivered what they hoped to in those tests. And also, it's added delays to getting approval from the FAA to do the next test launch. And that they've got this ambition to launch people on a manned mission to the moon sometime on or after September 2026. So if they want to kind of get anywhere close to that, they need to be doing these tests very frequently and getting success. So I think the fact that it was not perfect, but close to perfect in terms of the objectives, I think will help them to kind of speed up those tests and move towards that objective.
I mean, clear focus of congratulations coming from, well, the guy who, of course, ultimately leads this business. Long term, whether it's on a day-to-day basis, Elon Musk saying, despite loss of many tiles and damaged flat, Starship made it to the way to a soft landing in the ocean. This incremental need for improvement, how costly is that, Matt?
Very costly. This program is kind of running into kind of billions of dollars, but they've got multi-billion-dollar contracts with NASA, and also NASA's a really important client for theirs in terms of taking US astronauts back to the moon. But also this program is really important for the Starlink business, which is their low Earth orbit satellite business, which has a huge number of customers now, maybe approaching 3 million, and they want to use the Starship rocket to send more and more of those satellites up into low Earth orbit over the midterm. So, it's important both for NASA, and it's also important for the SpaceX business as a whole, and particularly Starlink.
Love bringing the contextualization there. Matt Bloxham, we thank you, Bloomberg intelligence analyst and fellow space geek. Meanwhile, we turn our attention to China for a moment. Alibaba, the president, Kuo Zhang, speaking exclusively with Bloomberg TV's Annabelle Trulers about China's economy, about tariff impacts on small and medium-sized enterprises on its platforms, but also about how the company is incorporating, guess what, AI. Take a listen.
This year, we are targeting on two parts. The first part is about AI. So, AI GC, the generative AI, actually is one of the biggest kind of breakthrough for the technology. And using AI in global trade actually is one of the perfect user scenarios. So many use cases that we can help to improve the efficiency for the sellers. We can help their efficiency, how to post product, do the marketing, do communication with buyers, and as well as to manage their business, to see data. And we are using technology to help the seller, the buyers as well. So previously, the buyers using Alibaba.com as a sourcing engine. And now with help of AI, this kind of a creativity engine for the buyers. we can help them to generate a product which can fit their imagination, and we can use the agent to help them to source, to connect and trade with the right partners. So all this kind of technology can lower the barrier for the seller and the buyers.
That was Alibaba President Kuo Jiang. Watching shares also of Meituan, another Chinese name as we head to break. Earnings beat expectations, top line growth 25%. But the company also expanding to new markets, the Middle East, looking at Europe and other parts of Asia, its first foray outside of its domestic market in China. Interesting. Be right back. This is Bloomberg Technology.
If we take out the 73,000 in the next week or so, we're going to end the year at 100,000, somewhere around there, or even higher. Markets work, they create ranges, and when the top of the range breaks, you have a nice extension. And so, the bottom of that range started around 40, so 40 to 70, the 70 goes to 100.
Cold calls coming from Galaxy Digital CEO Mike Novogratz. His outlook for Bitcoin as it just hovers still near that record. Joining us for now of what fundamentally or not fundamentally is pushing it higher, VettaFi Editor-in-Chief Lara Krieger. And it's great to have some time with you, Lara. And there has been this focus that at the moment, the political sudden tailwinds in the US aren't being baked in to crypto's price points right now. Do you agree?
That's a good question. I do think that politics has played at least some role here, right? So this is one of the few issues, crypto investing and cryptocurrency, on which we finally have bipartisan congressional support, which, as you know, is very much not easy to find these days. So, I do think politics plays a role here, but not the entire role, right? Like there's also enthusiasm around the finally getting the access to spot Bitcoin ETFs and advisors and institutions gravitating to that vehicle. And also there's interest and excitement around the spot Ethereum ETF, potential of that coming to market, and when is that going to come? And that's the next new hot topic.